Today in managerial accounting, we're going to look at cost behaviors. There are different types of cost behaviors, and this is kind of the way that a cost acts overall. There are fixed costs, variable costs, and mixed costs. Fixed costs are going to stay the same in total, regardless of the number of units produced or sold. Fixed cost per unit will change as more or less units are produced. Examples of fixed costs include things like depreciation, salaries, insurance, and rent. Variable costs change in total each time an additional unit is produced or sold. Variable cost per unit stays the same, but more units produced or sold means a higher total cost. Example of variable costs include direct materials, direct labor, and packaging. Mixed costs have characteristics of both fixed and variable costs. Cost is split into its variable and fixed components. Examples of mixed costs are a little more difficult. It could be like a phone bill that's set at 800 minutes and then 10 cents per additional minute, or water bills that are fixed with an additional cost for going above a threshold. Here are some charts of what these cost behaviors will look like. At the bottom, you can see the number of units produced, 0 to 100. On the side, this is the cost. So for a fixed cost, regardless of the number of units produced, 100, 200, 300, 400, 500, the total cost is still $500. In the second graph under variable, as the number of units produced increases, so does the total cost. So if you produce 100 units, the cost is $100. 200 units is $200. 300 units is $300. 400 units is $400, and so on. In the mixed graph, we can see that regardless of the number of units produced under 200, the cost will be $200. When a company produces more than 200 units, the cost is going to go up at that point. So if you produce 100 units, it's going to cost $200. If you produce 200 units, it's still going to cost $200. But when you get above that threshold, the cost goes up. 300 units is $300, 400 units is $400, and so on.